Welcome back. Chris Wilkins is the Chief Executive of today's new listing, DVT, and it's had a very interesting ride already, rising by more than 20% of the pre-listing price of a rand. Last Chris heard, he tells me it was trading slightly below a rand, but I guess, Chris, this is day one. It's not really the end. It's the beginning of a new future for the company. Why did you decide to list in the first place?
Alex, I think we see a lot of opportunity in the market right now. Technology is back in demand. It's sexy again. We're seeing opportunity. Well, apparently, the demand is there. We started DVT way back in '99 as .com crashed, so we had to build it through the toughest times probably that technology has had possibly in 5 years, or possibly 4 or 5 years. After the 2005, 2006, those first 5 years very tough, it's picked up a lot. So for us, demand side is very strong. There is consolidation opportunity in the sector. There's a lot of smaller companies who would see value in being part of a listed entity. And of course, we're very small, so part of our strategy is acquisition.
We hear from some of the bigger companies like Byte Technology, Dave Redshaw saying things are tough. Dimension Data certainly isn't shooting the lights out. Data's doing okay, but they're international basically. Are you being able to swim against the tide?
Well, no, I thought our data share price was up at the moment. Pretty
not
much
shooting the lights out.
Not shooting the lights out.
Rand to 8 rand?
Yeah, no, but if you look at the progress over the last 4 or 5 years, there's been a steady pull. All I can say is that when I look at demand side in our business, in the applications and custom software, packaged product space, we are seeing strong demand. We've never had it so good from that demand point of view. Possibly we have a good brand and reputation, that's helping. But I do think the sector is on the up.
Okay. Now, listing is always an important marketing exercise as well, and often when it's prodded into going with one of the big 4 accounting firms or one of the big legal firms, I see you didn't succumb to that attraction. Greenwood is your auditing firm, and your lawyers are Jarvis, who are very low profile.
Yes, they are, and I think coming from an entrepreneurial background, there was 2 of us way back in '99 in the office scratching our heads, asking ourselves where we were going to go, and we appreciate smaller companies that have good skills. Greenwoods have been with us since day one. We had a senior partner looking after us, 2 people in the company. They've been very good to us, and we believe they have the skills to take us forward.
That's good to hear that, because quite often when a company gets to a certain size, they abandon their old friends for fashion.
Yes.
50 million rand was the pre-listing valuation. You're around there now. With
yes, we are around a share.
Yes. It's still a fairly small company.
Yes, we are. Very small, in fact. And that's why acquisition is part of our strategy going forward. We wouldn't have listed unless we saw the signs in the economy generally and within the technology sector where consolidation was possible. So what we're hoping to do is we have solid organic growth prospects, and we'll complement that with some acquisition as well.
But could you not acquire other companies more cheaply through debt? Interest rates not that high?
Well, I think entrepreneurs that start companies have all their wealth, if you like, tied up in private equity. So if we had taken private funds, then to swap out private equity for private equity doesn't really make sense. I think value is seen in these companies when you list and when you're trading as a public entity. And we believe that's far more attractive for these smaller companies out there, the ones that are doing well. For these entrepreneurs, these guys to unlock their wealth. You know, if we stay private, they wouldn't be really interested in swapping their shares for ours. I mean, what's the point?
They get the cash and they could then go along and buy another share if they wanted to.
Well, exactly. Exactly.
So that's my point. You know, if you can buy a company with cash, you can raise the debt. Why did you need to list?
Well,
to be able to do that?
When you buy companies, you don't necessarily outlay all the cash up front. You need to make a good part of the purchase price shares. So there will be a cash outlay to make it worth your while, and a good part of it is shares. And then all of us as investors in DVT are all pulling on the same oar. Everyone's incentivized to look at the medium to long term.
I've been around a while, and I don't know if that always works. But
of course, no plan is perfect. The execution, I think, that counts.
You are looking forward to, or you have been projecting some pretty aggressive growth. Your profit last year, 2007 February, was 4.2 million. You're expecting to treble that in just 2 years. How will you achieve that?
We're looking at 30% year on year.
Well, 12 million is the forecast for pre-tax profit in 2009 from 4.2 today.
That was last year. Yeah, there was an amortization write-off last year which did affect our profits. If you look at our growth curve, it is in line with where we've come from. We're looking at approximately 30% year on year. Yes, it is aggressive. We have an established Cape Town business. Now, Cape Town is a smaller economy than Gauteng. Gauteng is relatively new, so what we're seeing is a nice, sustainable business in the Cape that is showing good profits with the Gauteng upside potential potential. Accounting has just reached the pitch where it can grow. And we've got the team in place, we've got the guys working hard, all pulling together to get that kind of growth. And I think the combination of established Cape Town business, which is where we started, and newer Johannesburg business, which is just getting into stride, the rubber hitting the road, I think it's that Joburg business that will give us the growth that we need.
You also have a relationship, as I mentioned earlier, with Software Futures. Software Futures,
Yes.
Better Links company.
Well, the old management team of Software
Yeah.
Futures. Of course, we have nothing to do with Software Futures in its present form.
How did they, or why did they identify you, or how did you guys come together? Just for way of background, Software Futures was a pretty highly regarded company, then was bought by Fidentia. Derek Hughes, who was the CEO, wasn't too excited about the Fidentia involvement, and he found you.
You could say that. Yes, a very interesting story. We admired Software Futures when we started DVT. Software Futures was one of our main competitors. We admired their business model. We admired the way they projected themselves into the industry, and we aspired to what they were. When we heard that Derek had left, we phoned him immediately and said, look, we're based in the Cape, we're at the wrong end of the continent. We need someone to head up and accelerate the Joburg operation. So a couple of dinners later, Derek decided to throw in his lot with us, and the rest is history. What did happen after Derek joined is we had a migration of some of the top management who came across, all who were involved in building Software Futures to what was then the biggest software and services company in the country. I think they exceeded 500 staff at their peak. So we put a great mix of entrepreneurial skills from the founders right the way through to that big company experience. And Derek himself is now going to lead our mergers or acquisition strategy. He was responsible for 15 acquisitions whilst with Software Futures. So we feel this is a nice team that we've pulled together. We've got the depth, we've got the experience, we've got the entrepreneurial know-how, we've got the big company know-how. So I suppose Fidentia did us a big favour. We were able to join forces with what was a great team.
You say he wasn't too impressed with what happened at Fidentia. Was there anything in particular that pushed him towards you?
I think Derek just had a very close look at what was going on in terms of, first of all, the price that was paid. I think people had opinion about the price that was paid.
Did you try and buy? Or no, he tried to buy it as a manager.
That's right. There was an MBO on the table, and Fidentia's price was a lot better. And then I think
how much better? A multiple?
I think it was probably twice. We were looking at twice. So there was some belief that it had been overpaid, or it was an overpayment. And of course that puts pressure then on the company itself if it's being purchased at too high a price. And also the style. There was definitely a difference in shall we call it, management style with the guys who walked in and took over, and with Derek's team. We're in a people business, and you need to treat people with respect and dignity. You need to listen to them, and you need to act where you need to act. But you don't go in with a very, very strict command, control, do as I say structure. It's a consensus-based, collaborative.
But you also don't use widows and orphans savings, trustees savings, to go and buy companies at double the price of what they're worth. So we know the Fidentia crooks are crooks. We know who they are. But it was interesting that Derek saw it quicker than the rest of us.
Very quick, and that's what impressed us too. Derek moved on very quickly, and we liked that. And it was, as I say, a great opportunity for us, and the rest is history.
And you managed to pull some of the good people from Software Futures into your business.
Mainly at the senior level. We're not in the business of going and poaching good people from all of our competitors, but sure, business is business, and of course Derek had all the links and contacts back into Software Futures. We had a lot of people coming to us, asking us what opportunities there were.
Where do you go to from here?
We see consolidation in our sector. We see ourselves pulling together some other companies, same size, perhaps a bit smaller, maybe slightly bigger than us, and putting together a world-class software and systems applications company, services-based and IP-based. For us, it's all about building software or selling packaged products.
Chris Wilkins is the Chief Executive of today's new listing, and its name is DVT, one to watch. It certainly isn't going to be out of the news forever. Well, that's all from Power Lunch today in association with MoneyWeb. We're crossing now to CNBC Europe for Power Lunch Europe, and that's with Louisa Boyson. CNBC Africa will be back at 4 o'clock Central African time with regional updates.